So, hi all. My name is Elizabeth Spiers, and I'm the founder of the Insurrection. We're an agency and research firm with a specialty practice in virtual reality. And our panel today is about the next billion-dollar opportunity in local. Joining me is Bobby Ocampo from Revolution and Matt Hartman from Betaworks. Do you guys want to give everybody a sense of what you're working on right now and your bios?
Sure. So, hi, I'm Matt. So Betaworks we sort of do two things. We have a business where what we call the startup studio, where we build new companies from scratch. So we've started about 20 companies over the last 8 years. And those are companies sort of early on, Bitly and Chartbeat, and then more recently, Giphy, which is an animated GIF search engine, and Dots, which is a connect the dots game. And then we also have a venture capital, we have a fund. So we invest in about 20 seed stage companies a year. And our focus is really on in both cases, is on that intersection between technology and media broadly, but also on sort of data-driven business and social products. And so I can talk a little about where we see that intersection with the local opportunities.
And I'm Bobby, so I'm with Revolution. We're a venture and growth equity fund in Washington. So we focus really on really broad, but any industry that really hasn't been transformed. But I think different from Matt, they're probably at the forefront of emerging trends, and we're really just trying to go where there's a big pile of money already being spent, and we have some wedge such that startup becomes the incumbent, or the incumbent buys them because they're so annoying.
So thank you guys. So the title of today's panel is we're today's billion-dollar local opportunities, which kind of presupposes that there are billion-dollar local opportunities. From where you guys sit, are you seeing that? Are you seeing specific local plays that you feel like could be the next, to use an overused term, unicorn in the space?
No, please, yeah.
So I think I think the answer is yes, but your framing of it is, I think, telling, which is the next what, like the next which company. And a lot, as you just said, you were talking about kind of investing in new companies that are displacing old companies. What are the companies that are really big right now that that these startups are coming through to disrupt? And does that happen in the same mechanical way? So is it a company that has a massive sales? I sometimes think about these businesses being built in one of three ways. Either you're building one side of the market, like you're building the sales team, or you're building the other side, which is kind of maybe it's the consumer-facing piece of it, or you're building both at the same time, but starting small in one geography and then moving to different places. And so we see, what the areas that we focus on to find those opportunities are really in the enabling technology. So we tend not to focus on companies where they're building out the sales team first. We were talking earlier about kind of Groupon as an example, where they really built out the sales team in each geography, and that was, I think, a big asset for them. For us, we invest in companies where the technology is the big asset. So a company like Estimote, which has beacon technology that others, a number of the companies who are here, use them just to be able to track, and is that kind of infrastructure play a big opportunity also?
Yeah, so you mentioned three legs of that stool, and we're probably more sales focused, and we talked a little bit about Groupon when backstage, but so we were early in Living Social, and what we saw there was that we've never seen revenue scale that much so quickly, but to your point, Matt, that you needed several hundreds of millions of dollars to compete, and if you recall in 2009 or whatever, or 10, when all these companies were raising money, I don't know how many billions of dollars was put into the category, and there were only 2 left at the end. And so for us, I mean, I don't know what the next opportunity is, but I think there should definitely be a focus on capital efficiency, because we saw it early, and the one thing we say a lot of Revolution is your home market never behaves as well as your other markets, right? And I think that was the case there, because in DC, we do great, but you go to LA and your customer base behaves differently.
So I have one other comment there, which is that I didn't mention, which is one of the areas that we look at a lot is what is the messaging, kind of what's the communications operating system that that these businesses are using. So a lot of times, I was sitting in some of the other the panels, and some people were talking about the opportunities to bring people customers which is good. But what about the opportunities to be able to communicate back and forth? So in the Kik Messenger earlier, they were, panel, they were talking about the ability to communicate with a restaurant or with the place in the most easy interface for you. So right now that might be a phone call, but in the future, is that text message? Is that inside of WhatsApp? Is that communicating not with a human being, but asking a bunch of questions because they've grabbed all the frequently asked questions and are able to quickly respond? And is that, as a kind of this new generation of people is coming online that prefers to text over talk on the phone, are those communications and media platforms actually the wedge in?
Can I add one more? And that's a great point, actually, Matt. I think that we're investors in a company called Booker, which is up here on the slide here, and they're doing great. But what we found is that it just takes a lot of money to sell software to VSBs and SMBs. And so, to your point about creating software to make it really easy, so that anyone can use it, cost effectively, I think that's really the next frontier where you're getting adoption from all these businesses, but you don't need all the salespeople to go sell it and adopt it and make sure they don't churn.
Yeah, to go back to the Groupon analogy, in 2013 or 14, if you looked at Groupon's economics, they were moving towards Groupon Goods, and partly because there was a feeling that the direct selling was not as scalable. But with Groupon Goods, you could live anywhere and order anything, and it would land at your doorstep, and it didn't necessarily have to be a local business. And now they've kind of pivoted back to local, and they argue vociferously that they're really operating in a two-sided market, which, to what you were just saying, Matt, they say, we have this local OS and we're feeding data back to the merchants, they're giving us data, and it's all synergistic. When people express, or if you guys have, if you see deals where you're a little bit concerned about the scalability of the model because it is local, do you see entrepreneurs trying to position it as not being local, or doing kind of what Groupon Goods did with their analysts and said, or Groupon did with their analysts and said, well, actually we're doing goods, it's an increasing part of our revenue, it's maybe we're not really in the local business?
Well, I'll answer for us is that I think our outside investments are usually at the seed stage, sometimes even what's now being referred to as pre-seed. So they are super early. It's often a couple of engineers working on it. And so it's very hard to make the pitch that you're going to do two things really, really well at the same time. And so you're already such a small team. So I think companies, at least the ones that we've talked to, are very specific. Either they are going after that market, or they are avoiding that market, or they have a specific strategy because they just don't have enough resources to be able to pursue multiple ones.
That's a good point. For example, we looked at the flower category a lot, and there are plenty of them out there, and some do really great in their home market, and those markets might be $25, $50, $100 million revenue line items, but I think people kind of get lost in trying to attract venture money and say, no, we can go conquer the world, but there's really no reason to. I think that, I don't know, for me, if I were ever starting a company, I would probably run it to be profitable, and if I need venture money, I'll take it to grow, but there's nothing wrong in being a $50, $100 million business in one market, because it could be highly valuable just to you if you ever wanted to exit it. So I think for us, we see a lot of people who try to tell us a story of how it can get really big, but we're okay with having it be big in one or two geographies.
So of the deal flow that you're both seeing, where are the opportunities in local? What are you seeing deals for the most frequently, and what are you personally most excited about?
I mean, so I address a little bit of the second part. One of the things I saw sort of spike and then at least for us go down a little bit was the notion of tracking people locally. So for a while there was this idea of basically kind of turning routers inside out, listening to everyone ping everything, and people are trying to figure out different angles into that. It turns out one of the things I think that happened that Foursquare proved was that if you just ask people for where they are, they'll be willing to tell you, and then there's no perception of a privacy issue. I've seen fewer and fewer companies, and maybe you see more of this than I do, but fewer and fewer companies that are purely talking about kind of being the Google Analytics of the physical world in a very explicit way, meaning they are going to put a device in, and then they're gonna track people, and those people who are walking by aren't gonna really know. And to the extent that people are still looking at that, they're looking at other angles into getting that data.
Yeah, it's interesting. I think on the location side for us, we're seeing a lot of companies that serve not small industries, but interesting ones like HVAC, plumbing, electricians, or whatever it is, and contractors, but making sure that they're on the job and you can tie the location to it. And there's an audit trail in place where he or she checked in at 10, they left at 11, and you can't lie about that. So we're seeing really interesting categories that sprout up around that just within sub-verticals of software.
So the converse of that question is, what are you seeing that you think is overrated or you're just seeing too much of at this point?
So we all saw the Dollar Shave Club acquisition, and it's a fantastic outcome for everyone. I wish I was early in that too. I think that was definitely the exception. I still think that e-commerce is very difficult, and I see a lot of money flowing through the space. And I don't know. We have a couple e-commerce companies, and I'm happy with them, but I surely wouldn't want a portfolio full of e-commerce because consumer is difficult. It rarely breaks even, and you always need money, and I don't know, it's just very competitive. So I don't know. Once we saw the PR on that, we saw like a good month of e-commerce there, a lot going on in our fund. But yeah, that's probably the one that I think is a little overheated right now.
I'll tell you the area that I'm excited about, and then the thing that I'm seeing that doesn't that the potential opportunities around it I think aren't necessarily there. So what we're seeing a lot of is these companies. I'll use Uber as an example. Open up APIs. Postmates I think also opened up their API. So there are a whole bunch of physical world companies where you can send an API call. So you can programmatically send atoms from one place to another. So you can access an Uber's API and say, send this car to over here to pick something up, and then over here. Same things, I think, with Postmates, and there's a few other companies that do this. For me, I think that's super interesting to be able to have access to their platforms like that. I think the question is, can you build independent businesses on top of that? And how much is, we're seeing, again, kind of thinking about to the bot conversation earlier, a lot of people who are just tying together APIs that don't necessarily have their own proprietary angle to it, and so it's hard. It's from an investment perspective, it's hard to see how this thing becomes defensible over the long term if you're kind of relying on everybody else's stuff, unless you have your own sort of way to either collect a separate set of data that makes your service better than everybody else. If you can build this thing over the weekend, then the next person can also build the same kind of service over the weekend using the public APIs.
To go back to your example of Foursquare and people sort of voluntarily giving up their data, you know, we're in an interesting political environment, interesting cultural environment right now where a lot of consumers are just being educated about the privacy implications of various technologies, and they're largely unaware of how much data they are giving up by just using an app. What happens to the local tech model if people do become well educated and they just kind of go, I'm not going to opt into releasing this data? You know, what kind of trends would you foresee? And are there any technologies that aren't so heavily data dependent on, or at least consumers allowing their data to be used, that would be interesting?
I mean, I think on the privacy side, it's got to be a trade-off with consumers. Like they have to get something if you're going to give them something, right? So most advertising models, Gmail's like you can just have free email, but we get to read everything and serve ads against you. And you watch TV, and a lot of the basic stations are free, or their business models are some combination of you paying and then they also have advertisements. So I think that it's not uncommon for us to say, okay, I'm willing to trade my sort of access to my eyeballs or to my data in exchange for something. It's when there isn't that kind of explicit trade-off that's happening that it starts to get tricky. I think that some of the most interesting business are ones where the data is sitting a little bit further back and then just being used to create a better experience. I mean, this is what Amazon's recommendation is sort of doing that, right? But because you're going onto Amazon, you're sort of making this trade-off with them. You know that they're taking your data, they're at least not sharing with other people. Maybe, who knows? So I think that over the long term, if the service that you get back, the product that's given back to you, whether it's a better recommendation or whether it's faster delivery to you because they're tracking a bunch of things, I think people will continue to want to share it out. I do think over the very long term, people are going to have control over it, but I don't know if that's 5 years or 50 years, where there's this sort of you can imagine a world where there's a profile that you take along with you different places, and so Google Ads doesn't control that. You decide, you take that and maybe you give it to Google, maybe you give it to DuckDuckGo or somebody else, and so you can sort of envision a world where that happens, but I don't think that we're there yet.
So we invested in a company that was doing exactly what you're talking about, trying to do it, and just never hit. And I think it was a couple things. One, really that the user just didn't have enough of incentive to just, okay, well, I get to keep it private, but it just didn't, there wasn't enough for it for the consumer for it to hit. Then the advertisers just, okay, well, we can have access to your user base, but your user base is so small. I think it's a great idea in theory, but it's funny, when we tried to go and fundraise for a company, we talked to one of the best investors in the space out in the Silicon Valley, and he said, I'm sorry, but privacy is dead. And we talked to, 40 funds, and we got the same thing. But so I guess that's now our stance, right? But maybe if it had worked out, we would have a different line of thinking.
Well, I mean, the way I think about privacy is that the cost of being public was really cheap a very long time. Like in 1970, it was expensive in 1970. If you wanted to get your message out there, it was really expensive. You had to buy TV ads. And the cost of being private was inexpensive. And then over time, and this is not my sort of original thought, but over time those things crossed, and a big piece of that was sort of social media. But you're starting to see expectations flip a little bit, I think, with things like Snapchat, where the privacy problem is really about bothering others with my information. So I'll post 10 things to Snapchat, but I'll post one thing to Instagram, because on Snapchat you go in and you look at you opt in to kind of looking at what's going on with me, versus Instagram, where if I do 10 posts, then I'm bothering you in your feed and I'm sort of ruining your feed. So I'm imposing a cost onto somebody else. So I think it's sort of maybe worthwhile to take that framework and apply it to sharing your own data as a consumer. Are people scared to share their information? Are people no longer scared to share the information because they figured it's going to be tracked anyway, and then want to just optimize to get the most out of it that they can get?
Yeah, I also wonder if people's risk profile with regard to privacy slowly changes. The more they put information out there and realize there are no negative repercussions, they just increasingly give up more of it. So let's assume that we're in a world where nobody cares about privacy at all, and we have unlimited access to all sorts of consumer data. I want to talk a little bit about what loosely termed frontier technologies, AI, VR, drones, 3D printing, and so on. But I want to start with AI. Let's say we have unlimited and really fantastic data sets. How does AI change the way local tech works?
Good question. Take it, Matt.
So where I've seen AI be most successful right now is on the back end, where consumers don't actually see it. So there's actually a really good article about how Apple incorporates AI, where it was about figuring out what's your finger and what's your side of your hand. And so it has nothing to do with Siri, it has nothing to do with pretending to, or guessing what your question is. It's just sits in the background and just does a better job than what the other algorithms. And so AI sort of means a lot of different things, but using machine learning algorithms that make themselves smarter over time, is sort of working in very, very specific verticals, but a lot of it's behind the scenes. So one example of where that might work is if you're taking location data, if you check in here on Foursquare, or even if your phone is sitting here, what does it mean to be right here? And if you're a little bit off, if all of us are kind of in this rough area, how do we know who's here, right? For a local use case. And one of the ways to do that is to feed all of that data into a whole and get a big enough data set to be able to say, okay, we know that this is very high probability that you're actually here. When I walk by, I live across the street from a Starbucks. So every time I walk back, I get a push notification from the Starbucks app that says, hey, you're near Starbucks, you want one? I'm like, no, I have to turn it off. So I think if they can start to say, hang on a second, you spend a whole lot of time right across the street from a Starbucks, maybe we shouldn't push notify you every single time you walk by. We should only do it either in the morning, or we should sort of selectively do it and start to learn when you're actually tapping through. That's taking machine learning and using it in the back end where it feels like it actually makes a better consumer experience and will end up increasing the throughput.
Yeah, I mean, we're still waiting. I mean, we're I obviously see through like, email and assistance now, and it's far from perfect, right? But I think that once you're able to kind of get it right on that one use case, right? I think that's when you really start to pick up. Because for us, I mean, it's just so early, right? And it's so imperfect that, gosh, you really have to believe. But I agree. I mean, the use cases are, if you can just nail one little thing, I'd be very happy with that. But I don't think we've yet to see a company, a startup at least, really do a great job of it yet. I don't know. Maybe I'm wrong.
Yeah, to your point, Matt, about emerging tech being the most successful when it's in the background, we already have augmented reality applications out there, at least in as much as you would consider a video overlay augmented reality. But I think people really started talking about it a few months ago when Pokemon Go came out, because everybody lost their minds, even though there had been apps like that before. Are there use cases you can envision for specifically location-based AR apps, and are you guys seeing any of that in your investment pitches?
I mean, we're seeing it a lot, and I think that it's the literal versions. I'm curious for your thoughts on this. The literal versions are the things that we get pitched a lot, but those don't seem to be the things that necessarily work with consumers. Like, people just don't care. Whereas Pokemon Go is this perfect storm of like explaining to people what AR was without using the words augmented reality and getting people to get up from wherever they were and go to a different place. And part of it was a brand that people that people were familiar with. Part of it was things like battery life and cameras being really good. But we are at least we get pitched a lot of things that are sort of like, take a QR code and now you're going to bring it somewhere, kind of like what exists on WeChat in China. And I'm not sure that execution of it is going to end up being the one that consumers adopt. What do you say?
Well, yeah, for us, I mean, we probably see it more almost exclusively on the B2B side, so all enterprise. On the consumer side, not so much, so I can't really say much about that, but we're excited about it, but I still think it's really early innings, and people are very slow to want to deploy us fully to your workforce, and what does that do to your staff? Do you really downsize, or what? And then psychologically, how to, like, all that stuff, really early innings, but we're encouraged by it, but we're still kind of waiting for, I think, the people with the dollars to really buy into it.
Okay, well, we have a few minutes left if anybody has questions for these guys. No, well, if not, I have another question. If somebody's coming to you, say, perhaps in this audience, with an idea that's tech-focused but also has a local angle, what advice do you give them about how to pitch you guys and what you're looking for?
That's a good question. I'd say show me some small kernel of the idea working a little bit, and I'd really be interested in it. And I think that for us, I think it may be a little different from how you guys work, but we like to track the data points over time, and even if it's really early, it's okay. But I guess hearing it and having a data point in our CRM, and we talk again in a month, and 3 months, and 9 months, and the lines are going up and up. I think that's probably the best thing. Just show some small kernel that you're making progress. Tell us what you want to do. And if you execute on that over and over and over again, it makes our due diligence process really easy, because we've known you for a long time, and you seem to be doing well.
Yeah, I think for us, what we look for are kind of two things. One is some hypothesis that you think is true, that you're testing. And I think often what happens is there's some hypothesis that you're not testing, that startups aren't actually testing the key hypothesis that makes their business work or not, and that you're starting to see data, as you said, that starts to show that that's true. So an example might be, most of the time, we're going to make a QR code scanning app when you come in, and the hypothesis is that people are actually going to use that thing. And from what we've seen historically, when people walk through the store, it's a very, very small percentage of people are willing to download the app and then sign up and log in and then scan the QR code and whatever. So if you say, well, we think we're going to have a better success because we're on top of Kick Messenger and for a bunch of other reasons, then you start to prove that one hypothesis is true. Then that starts to be really interesting, because then you can start to build all the other things around that, if you have sort of that one thing that other people don't have yet.
Okay, last question. What's your favorite piece of local-oriented tech, and why? Local-oriented. So
So I mean, we had this is a little self-serving, but we had the company Estimate, which we invested in, just came out yesterday with a product called Mirror, which has a beacon and also an HDMI connection. So it can now any TV it almost serves like a QR code, so that when you walk by, if you have the app, it will put a specific thing onto the television, and it's an open platform. So I think that's kind of cool.
Also still serving, but so I just learned Matt's brother actually ran the data science at one of our portfolio companies that we exited to order up to Groupon, but it's not that sexy, right? But they focus on online food ordering and delivery for markets not like New York, so college towns, right? Where their best market, you'll laugh, is State College, Pennsylvania, and that market alone does $4 million in net revenue to the business, right? And there are 100,000 people that work there. And so our thesis was that, gosh, if there are a lot of these college towns out there, why don't we just replicate it over and over again? And so and we got the delivery side of it to work because you had the mass, and really the college kids are just rabid about it. So on the delivery side, it was interesting because you had the huge, highly addicted customer base. And so that was what we really liked about that one.
All right, well, I think we're out of time, but thank you guys so much for participating and being here, and thank you all of you guys for being here to watch. So.